So the IRS says controversial $10,000 reporting rule doesn't currently apply to cryptocurrency, in a nice turn of events from the cryptocurrency mining perspective. The two U.S. agencies announced on January 16th that controversial transaction reporting rules do not apply to digital assets, i.e. cryptocurrency. The Internal Revenue Service, the IRS, and Department of the Treasury said, quote, businesses do not have to report the receipt of digital assets the same way as they must report the receipt of cash until Treasury and IRS issues regulations. In an attached announcement, the IRS and Treasury also said, quote, this announcement provides transitional guidance and clarifies that at this time, digital assets are not required to be included when determining whether cash received in a single transaction or two or more related transactions meet the reporting threshold. The two agencies said that they intend to issue proposed regulations applying to the receipt of digital assets at a later date. This will allow the public to submit comments in writing and at a public hearing if requested. Obviously, we want to get on that as part of the cryptocurrency mining community to voice our opinions. If they even matter these days, I don't really know. The rule requires businesses to report on Form 8300 that they have received more than $10,000 in cash within 15 days of receipt. At present, the text of the rule only mentions cash and does not explicitly mention digital assets. However, a particular law, the Infrastructure Investment and Jobs Act, was previously updated to consider digital assets as cash. The IRS, and dang, there's an ad, no thanks. The IRS and Treasury acknowledged that change, but said that the provision requires issuing new guidance before the change takes effect. The rule previously attracted complaints, particularly from the industry group Coin Center. Coin Center asserted that the rules began to apply to crypto transactions in early January. It also expressed concerns that the requirements could apply to entities that are not capable of compliance, such as blockchain miners, validators, and decentralized exchange users. Obviously, the reason for this is because in most cases, if you're mining, you will be having that set and then getting the payouts, and you can't really determine, you know, depending on like how much those assets are worth when you mine them compared to when you sell them and when you report them, all that sort of stuff obviously can be a little bit more difficult. This probably also does apply to like DeFi liquidity as well as validators that are doing proof of stake. I kind of understand where that comes from. Of course, those reporting rules would be more difficult. However, there is something to be said for selling every day for the amount of power you used when you're mining. And that is something that I do come into practice with, at least on the Bitcoin mining side of things, because it makes the bookkeeping a lot easier. If we move into like the speculative mining and GPU mining, especially hobbyist mining, not so much. Also, because it would be at the 10K realm, probably nothing anybody here has to actually worry about from that perspective. Coin Center also challenged the rules in court. However, because that lawsuit has not progressed since mid-2023 and was not acknowledged by either agency today, the case seemingly did not prompt the agency's latest announcement. The postponed rules only concern extra reporting requirements that apply to large transactions. General income tax rules still apply, requiring crypto investors and transactors to report gains and losses on digital assets. Of course, you can do the 8089 in that particular case. I believe Bitcoin.tax will generate that for you. You can import all of your trading history, blah, 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 generate the 8089, and then just give that to your CPA. That's what I do. On the income side of things, if you're using a larger pool, there's usually export transactions to make it a bit easier, or utilize a specific wallet, which is probably the best case scenario if you're trying to manage reporting and so on for all of the income, and you can track what the price was at the time of that and so on, so you can pay the income part of it. Just some tidbits of tips that I've learned across, over the past few years of mining. Now, you guys mined during the bear market. You made it through. Well, at least maybe a half of you. I know a lot of you motherfuckers over here didn't actually do it, but the ones that did, I have a new shirt for you guys, and it says, I mined with the bears for the bear market, okay? So if you mined with the bears and you want to rep that you did mine during the bear market, go ahead and head on over to shop.sonofatech.com. and the listing will be down below. I'll put it in live chat right now. I have a sweatshirt, there's a sticker if you'd rather have a sticker, t-shirt, premium shirt, all that cool stuff. Really like the new shirt. I ordered a few for myself, and I just had that design finished this week. Eventually it'll be on the YouTube channel, but that takes a little bit of time, so just give it some time. Proceeds, of course, go to supporting me in the channel, so there you go. And I thought we put some work into it, and I thought you guys might enjoy it. Thanks for watching this clip from the Crypto Mining Show. You can check out the full episode here, and don't forget to subscribe down here as well. You can also check out my crypto mining e-course at sonofatech.com, where you can get a free month of supporter status with a purchase at sonofatech.locals.com. Also, don't forget to check out my merch underneath the video or at shop.sonofatech.com. I'll see you next Tuesday.